Okay, welcome to this new questions and answers webinar for September 3rd, 2019. This is going to be a Q&A session. We also, if you have a microphone headset ready and you would like to contribute, it would be great to have you volunteering so we can do the analysis together. Maybe Venu or Miroslav, Gopi or Prasad are volunteer that for that. Are you interested, any of you? So I'm going to start, and maybe if you want to ask some questions, I will be able to uh, unmute you so you can speak. Okay? So let's start with this one. Let's go. I have a few cross pairs and some stocks. I don't know if we are going to have time to look at all of them, but the idea is to do so. Okay? So we are going to start with the euro NOK, euro dollar versus the Norwegian krone. So we've been talking in the community about the going long at this area of demand here, around there, because there is a very strong area of demand created there, responsible for breaking this area of supply. That eliminated this area of demand. That was tested, used up. So this area of supply was fully penetrated there. Price dropped, and this strong rally made of two ERC candles has been created. So after, what do the rules say about going long after such a strong rally? We've got one ERC candle, two ERC candles. We have classic resistance there, not able to close above. So after a very strong rally, we are waiting for a bigger retracement down to the origin of the move. Here, as we can see, I've drawn an ellipse there. We have a bullish engulfing pattern that is not able to consolidate away. We needed that to consolidate away in order to go long within lower time frames nested in this area. So if we have bullish impulse not able to consolidate away, we are not allowed to go long at nested areas of demand in lower time frames. If we take a look at the lower time frames on the daily here, we don't have anything here. As you can see, we have price action there, not able to close, bullish engulfing, and then we have a dark cloud cover, a higher high, another higher high, but it just can't close above this one. This is not demand, because in order to have demand there, we need a bearish trend line broken like this. But is that trend line correct? That one over there, the bearish trend line? Nope, it is not correct. We don't have a lower low. We have this first peak here, low here, but that was not a lower low. So this bearish trend line is not correct. Therefore, we do not have a daily demand area there. And even if we did have an area of demand, do you think that going long up there at this area within these bullish impulse trying to do just that, you could be going against all that? Obviously we have a bullish engulfing pattern as confluence and all that, but the location and what we are expecting as per supply and demand imbalances, as per the rules, is this. So going long at near areas of demand in confirmation doesn't tell us anything unless it is the right scenario and the location is correct. Understood? Let me read the community again, because some people are having problem logging in, probably because, yeah, I can't see Fripe from, no. Okay, good. Okay, I will make you the presenter right now. Okay, I will throw. Okay, I'm going to log out and log back in. Okay, also I don't see anything. Can you see? Okay, can you see my screen now, Miroslav? Everyone? Yeah? You cannot see this. One sec. Don't know what happened there. Okay, can you see the screen now? So probably I've been talking to no one. I don't see the screen. It should be there now. Can you see it? Now? Yep. Lima? Okay. Yeah, great. Okay. So did you see when I was explaining about the retracement here? Probably not. Yes or no? Nima, did you see it when I was talking about the expected movement? Okay. So what I was saying is that we are expecting a bigger retracement after such a strong rally. Bullish impulse did not consolidate here on the weekly. This is not demand because the trend line break did not. This trend line is not correct because there was not a lower low here, lower than the first peak's low. So this is not demand, and even if it was, it is located at bullish impulse that did not consolidate away. So we are expecting a bigger retracement down to the weekly area of demand. As you can see, previous areas of demand here have played out nicely. This one as well. This one was trying to retrace down there. It didn't, but it did after a couple of months, a few months, and then price rallied, creating another area of demand here after the trend line break, connecting these two peaks, and then drop down there. We call this in the community, and then price rallied, and we are calling this again. We're waiting for price to retrace down there. Will it retrace? We don't know. It looks like it will, but we don't know. It might fall short of retracing and hit the 20 MA confluence or even lower, and then rally again from there, creating the edge of demand. So we are expecting to go long down there. Everything okay then? So I repeated the explanation. So let's see. Miroslav, are you available or copy to take the microphone?
Hello?
Okay, copy, you're there.
Yeah, can you hear me?
Yes, I can hear you. Okay, good.
Okay. Good morning, everyone.
Good morning, copy. Long time, my friend.
Mm.
Oh,
Yeah,
everything
good to
is
be
fine.
back.
I'm better. Can you see the screen? Can you see with your eyes?
I can see with my eyes, Euro NOK week chart.
Yep.
See your cursor? Yeah, no problems.
Okay, so any questions about this, or you want to contribute with something?
No, not really. I think you've explained it quite well.
Okay.
The only question I have is that none of the candles where you have circled where its potential probably base is actually used above those bars.
It's
Price
actually,
is not really.
it's
It's
actually,
broken the
yeah,
supply, but it's not actually closed. I'm just wondering whether it could be a false breakout, and then
probably,
it'll
probably, but we don't know. We don't know that. I mean, you will know if it is a fake out if price drops down there.
yes.
So,
So
so what we
that's a
do
good.
know that's it. I mean, it's great to see everything in hindsight. Like here, I mean, this area of supply was eliminated. Okay, after trail and break. So
Yeah.
probably one on the left. So we see the bullish pink candle, and we say, okay, it's going to be a fake out. Well, it was, but it was once price dropped. We don't know. So what we
Yeah.
do, but what we do know is that this price action here on the left, as you can see, let me clean the chart a little bit. This price action here on the left was not good. Why? Because bullish impulse did not consolidate away. Same here.
No.
So this is negated. The area that did consolidate away, and this is an area of, I was a trail line break there. This is an area of demand. That is the area that played out. Okay.
Yeah.
So same here. Same here. We are expecting price to drop down there. Will it do it? I don't know. Looks like it will. But
Yeah.
we are not allowed to go long at nested areas of demand nested over there. So if we clean the chart, let me clean the chart a little bit. Let me do this quickly. Come on, there. So if we forget about the rules that we have right now, okay, we are going to be
Yeah.
looking just at the strongest impulses on the chart. So
Correct.
that one, 2 year Cs, that one, that one, that one
Yeah.
is not, this one. That's one almost, and this one is medium. But well, these are the strongest impulses on the chart. Are they imbalances? Well, as per the rules, we have to do the chain analysis. This one was demand. This one eliminated supply. So this one is
Yeah.
correct. This one is correct. This one also, this one is not because price rallied and it didn't remove that area. So we do, it played out, okay?
Yes.
But it is not part of the rules. Probably there was an area of demand on the weekly, on the monthly, sorry, probably. I don't know. Let me do this. Let me draw this, okay, and switch to the monthly chart and see what we have. Exactly. So there, that's what we have. We have here trend line break, and that area on the weekly is right that. A monthly average run. Okay? So we have monthly average demand. That's why price retraced to that area and started to react on the weekly. So by just looking at the charts and just doing this exercise, just draw the impulses that are very strong, and then if you want, try to do the chain analysis. I don't do that usually. I just do the chain analysis, drawing the trend lines, and I know this is demand, I know this is demand, and I know this is demand. So after such a strong rally, as per supply and demand rules, this asset is very expensive. We are expecting a bigger retracement.
Go. Yeah.
That's it. So it could take, the longer it takes, the better for
Okay.
longs.
Yeah. I just got one question.
Sure.
Okay. You know, you identified that, I don't know if you can see my cursor or not.
Let me allow you to draw. One sec. Attendees now can draw, and you should be able to draw. There should be some pen or something, some
Yeah.
icons on
Yeah.
the screen.
So you see this move here, yeah?
Yeah.
Although it didn't break this supply here. Okay?
Yeah.
But this is part of the monthly
Demand.
demand, yeah?
Yep.
Okay? So this is a similar setup here where you didn't have a good structure, okay? Like you explained before.
Yep.
Yeah?
Yep.
Similar here, you didn't have a good restructure.
Yep.
Yeah?
Yep.
But we had deeper penetration, probably into a monthly supply somewhere, I don't know. And here, because this is part of the monthly demand, I would have considered this as a zone because it is nested in the monthly and because you have two ERC candles, a good move away, a base, and then finally this is the demand level that broke that supply that you talked about earlier.
Yep.
So to me, this is the origin of the move, which is nested in the demand. So I would have taken that as a trade. Plus, once you've now got a wow here, like you explained, yeah.
Yep. Correct.
And also again near the nested demand, the monthly demand.
Yep.
So to me, that was a good move, and I would have taken that trade.
Yeah, but the thing is this, that as per the rules, this is not demand on the weekly. That was demand on the monthly. So you can take, based on the monthly area of demand we showed here,
Yeah,
then
absolutely.
you can take it. You can take it, okay? And or you wait for new areas of demand on the daily. Okay?
Absolutely.
That's what we are. The area we were interested to go long at on the daily was there. Okay?
Yes.
It hit that area, depending on your broker and your price action, and then price rallied on the 4-hour probably, and then price rallied and creating an area of demand there. So the whole thing now starts here on the daily, and all this is the weekly area of demand. All this is the previous weekly area of demand. So we are looking for price to do that. That doesn't mean we are allowed to go counter trend shorts. Okay?
Yes.
Because in order to have counter trend shorts, we need a middle time frame out of alignment. And in the weekly sequence, we need a daily out of alignment. And the daily is still in an uptrend. So
Yeah.
if we get this trend line broken, then probably we're going to have an area of supply there. And then if you are a content trader, there's a bearish void to be filled, no obstacle, overextension here on the 4-hour. And then price will drop down there very easily. Very
Yes.
easily. Make sense?
Yeah. Yes, it does. Thank you.
Okay. So let me do this. Let me try to go back and have my objects. Otherwise, I'm going to have to redraw everything.
Yeah, no problem.
There it is. So this is what we have right now. Any questions? Those in the chat room? Miroslav, you can also use your microphone if you want. You can unmute you, or anyone who wanted to ask a question, so we can do this more interactive. Okay, so now let's go to another one. I've chosen a few cross pairs. So we've got the Aussie Kiwi here. Okay, we have a clear downtrend that has been mentioned on previous analysis in the community. So here we have a downtrend. You agree with me, Gopi? Yeah.
Yes.
So depending on the broker, this low, and this is, I mean, quite impressive in the difference between this broker and the other brokers is just, this is Oanda, and I'm going to do this. I'm going to take a screenshot with Jing so we can compare it. And then I'm going to go and load Aussie Kiwi on ICE, for example. And look at the huge difference, my friend. Look at that. We've got a low here broken on Oanda, and this one has been broken completely. So the difference is huge, many, many, many pips. I just don't know why that happens, but it happens. So either way, we have a weekly downtrend, because if this is all-time lows, then we've got an area of supply. So there we've got that one on the Aussie Kiwi. Okay, we've got that downtrend, lows broken, etc. So we've got a weekly downtrend with a very weak, very strong weekly area supply made of several ERC candles. On what do the rules say about that? It says that after a very strong bearish impulse made of 1, 2, 3 ERC candles, then we are waiting for the retracement. The thing is, we are expecting that. Will that happen? I don't know, because price could do that and then drop again. And it does that very often. But we just have to focus on the rules, on the set of rules. We are waiting for price to retrace up there. So probably it might retrace to the higher time frame confluences where short will be possible again and new areas of supply in lower time frames. But we can set and forget at the weekly area of supply the full level or nested areas of supply if there are any on the daily. So if we take a look up there, we've got all these on the daily, and the daily really at the extreme is very poor. So you can take the whole level on the weekly, or you could say I don't have enough capital or whatever. You take half of it. Obviously protecting the stop loss 25% above the highs of the distal line. So the idea is to go short up there. So there is another rule that tell us that we are expecting a bigger adjustment. Not only that, which one is it? Copy?
Sorry, say that again.
A rule that is telling us that we are expecting price to do that, and it's been, and I'm giving you a hint by circling that. Miroslav just said it. What is the price action here telling us? What kind of price action?
The bullish engulf.
Exactly. Do we have a lesson about that?
Yeah, I believe we do.
Yes, so we
the
have
bullish engulfing light.
Exactly. So engulfing lights, which is the name is an acronym for where I'm trying to compare the traffic lights with the red color, the orange color, and the green color. So we've got a clean color now, saying that the traffic light is closed, right? And now it's telling us that we can go long if you are using lower time frames. So counter trend, obviously. So it is signaling the end of the move, and if a engulfing pattern happens after a very strong bearish move, then it is like even stronger. It is not the same. If we have, let's do this. Let's So imagine that we have this price action. I'm going to use this tool here, the replay tool. And imagine that we have this price action instead. So we have one ERC candle, okay, and we only have this. We only have one candle there. One sec. Basing candle and then an engulf like this. So is this scenario the same one as the previous one? I'm just asking anyone.
No,
Why not?
not basically because you haven't broken the lows yet.
Exactly. That's one of the reasons. No lows have been broken, as you can see here. No lows has been broken. And not only that, this is a strong movement, but it's we would tag this movement as very strong if we had 3 ESCs, which is almost like saying there is overextension. Once we have 3 or more ESCs, we can consider that time frame overextending and expecting a bigger move. So here the move is not that strong. It didn't break the lower lows. So even if we had a bullish engulfing pattern, what would happen here is that we would have a engulfing pattern and then another basing candle and could drop and be the pause needed before price breaks lower again. It didn't happen, but I just wanted to point out the difference. Every price action, every candlestick that we see in the chart, we have to read it and interpret it, because this scenario has nothing to do with the scenario that we can see that actually happened, which is this one.
Yeah.
The lows have been broken, and now the engulfing light has been created. And then if we look at the lower time frames on the daily, it is showing us much more information. Okay. It is showing us that we have drop base overextension. We made a lower low, overextension was resetted. So now we have a brand new area of demand. But what can we see here? We've got a pink candle there, a bullish engulfing pattern, and another pink candle. So it creates the classic support line here. So we've got on the daily, it's telling us that we shouldn't be looking to go short on any areas of supply that are there in lower time frames, no matter how strong they are on the lower time frames. So the daily combined with the weekly, it's telling us, hey, no shorts are allowed. We are expecting a bigger retracement. That doesn't mean we should be looking to go long. Obviously, if you are a counter trend trader or using the daily sequence, then you could be thinking going long. Why? Because there is a brand new area of demand on the daily created after the trend line break and a huge void to be filled. As you can see here on the daily, there is a huge void to be filled on the way up. Nothing to stop price from rallying. And on the 4 hour, there's just nothing. This is a very strong area of supply, very strong, was nested within where? Bearish impulse that did not consolidate away, and in the context of a bigger retracement after that such a strong bearish move. Make sense? Copy?
Yeah.
So by combining multiple time frame and top-down analysis, we can be very certain, not obviously 100%, that price is most likely rallying until there at least, which is where we have this daily area of supply over there.
Yeah.
That daily area of supply is right there. Okay? Make sense?
Yeah. It does.
Any questions from those in the chat room? Venu, any question? Of Rajesh, Prasad, Nima, Miroslav? No? Okay? Makes sense? Everything makes sense? If any of you want to take the mic, you will be welcome, okay? As well. Okay, good. Just tell me. So let's take a look also at the Aussie versus the Danish krone. Okay, so don't we have the same scenario here on this one, Roppy?
Yes.
We have a weekly downtrend, a weekly area of demand has been eliminated. In this case, we have a weekly area of supply created with several ERC candles, and now we can read, as you can see, these pink candles there. This is just quite big. It's bigger than the candlestick body. Then we've got another pink candle there, not too wide, and then this lower wick is all fine. It's not outstanding. It doesn't stand out as this one. So all within, and then what do we have again? We have a weekly bullish engulfing pattern, and the last bearish engulfing pattern has not consolidated away. So there are many rules telling us that we shouldn't be going short there, and the rules are: we are in a weekly downturn, so you should be thinking, okay, go short, but okay, go short, but you can't go there. Go short there. Why? Because this impulse has not consolidated away. We've got a bearish engulfing, and then we have a bullish engulfing. Price is at balance on the weekly. We are not allowed to trade within balances. We are interested at imbalances, and this is where the imbalance is located. Will you have to wait for probably a couple of months? Yes. But then in the meantime, there are other cross pairs and other assets, futures, stocks, CFDs, anything. I mean, there are many, many, many out there. Because if you think, okay, I'm going to start going long here, yes, that's a valid long call to trend. Why? Because we have the bullish engulfing pattern as confluence. We have an area of demand on the 4-hour, very strong, several ESC candles, responsible for eliminating this 4-hour area supply, was tested, used up. Then price rallied. Copy is gone.
No, I'm here.
Oh, there. Okay.
Yeah, I just got some background noise. I don't want it on the recording.
Okay, good. So now we have an uptrend, and the trend line has now to be adjusted. Okay, and look, there is a lot of room for price to keep on rallying up to the top. So this is a valid counter trend scenario if you are a counter trend trader, because in the weekly we have all these price action telling us, hey, it's now good to go long. We are expecting that daily area supply that has been tested. The first test dropped, accomplished nothing, no elimination of opposing area. So we are expecting a bigger penetration, and that is exactly what is going on. Okay, so if this is eliminated, we're going to have a daily area demand, and it would be good for longs if price doesn't reach the weekly area of supply, where it will be too high to go long again. So short bias on this one. Make sense, everyone?
Yep.
So that's on the Aussie Norwegian, and it's almost on all the Aussie cross pairs we can see the same scenario. But on top of it, what is one more thing that is helping the longs on this one that we did not have on Aussie versus this one here? On the Aussie versus the Swiss franc, we had all-time lows broken and all that, okay? But what is the difference between that one and this one? Exactly, Miroslav. What about you? What do you say? What is the difference? What is supporting longs on this one besides these price action? Copy?
Well, you're in a monthly demand, aren't you?
Exactly. We have a monthly area of demand. And look at this. What happened on the last bearish impulse? No consolidation away. We have a bearish engulfing pattern, but this bearish engulfing pattern, it's sort of, if we didn't have that upper wick there, it would be a hammer. So it looks like a hammer.
Yes.
So we have a hammer, okay, here, and then price rally from here. Then we have a price rallying from there, waiting for price to rally higher. Maybe in a few months, we're going to have this. Maybe. Okay, so we have a monthly downtrend, but there is no monthly area of supply to lean on to go short. Only confluences, so confirmation is needed. We have a weekly downtrend, so in the weekly sequence, we are allowed to go short there at that strong area of supply in the weekly sequence. On the daily sequence, we probably will have a daily uptrend. So if you're trading lower time frames with the 1 hour and lower time frames, then once that daily area of supply is eliminated, longs will be higher probability on the daily sequence. So that's the difference. So very similar scenario, but on the Aussie versus Norwegian krone, we have also, on top of all that, we have a monthly area of demand that is there. That all-time highs were broken, but that area, it retraced down there after probably a couple of years. 5, 6 years. Oh my God. So That's the analysis for this one. And if we take a look also at the Aussie versus the Indian rupee, what do we have here? We have a weekly area of supply eliminated after eliminating this weekly area of demand on the left. Okay, here. And now we have a weekly area of demand created. Why is this area of demand created? What is one of the possible reasons of the for this area of demand to be created on the weekly copy, or anyone in the community? Miroslav, Venu, why do you think this is happening?
You've got possibly a 3-month demand.
Yes, there is. This is the proximal line. So we have the reasons for that. Let me do this. Let me pull up. Let me load Word. So we're going to write a small document here, very quickly. So we have this for longs. What is supporting longs? We have 3 months demand zone, isn't it?
Yeah.
What else is supporting longs on the monthly? Any other price action characteristic that is telling us, hey, don't go short, longs could be great? What else?
You've got a kind of engulf there, isn't
it? No, it didn't. This is a bullish piercing pattern.
Oh, a piercing pattern, sorry.
What else? Venu, Miroslav, and anyone? Frederick? What else do we have on the monthly chart that is supporting potential longs? It doesn't have to be bullish price action. It can be also bearish price action and also support bullish price action in the lower time frames.
Yeah, there's no consolidation away from the bearish engulf.
Exactly. So we have no consolidation away. That is telling us no short. But if we have the 3 months area of demand in control and also the monthly area of demand in control, okay, there, then it's good. So we have monthly demand in control, monthly bearish impulse, not strong enough to consolidate away. Okay, so we've got all that. Okay, for longs. What else do we have on the weekly for longs? Supporting longs.
You've got the bearish engulf again, haven't you?
We've got bullish engulfing pattern on the weekly.
Yeah, and you've taken out a supply.
Engulfing, weekly supply eliminated, weekly demand created. Isn't it?
Yep.
All that is supporting longs. Anything else on, 1 sec, 6 things are supporting longs. What is anything supporting longs on the daily? Anyone? You included? Copy? What can you tell me about the daily? What is why?
Well, you got a wow long, daily long, haven't you?
Yes, we have
and
that
you've
one.
Got a new demand. Yeah.
Yeah. So we've got a daily wow long.
Yeah, and so all the
what else?
The lower lows are getting higher.
Yeah. Okay, but what can you tell me about the price action on the daily? I'm just pointing them out. Correct, Venu? Venu is saying daily uptrend. Okay.
Oh, okay.
Why uptrend? Because this is a daily area of supply that has been eliminated by
Correct.
this daily area of demand. 20 MA confluence in an uptrend.
Correct.
In an uptrend. Okay. What else? Bullish engulfing patterns.
Yes.
Several. Bullish engulfing patterns.
Also.
What else? I think that's what we have. Okay.
Yeah.
So we have we're gonna we could also mention the 4-hour area of demand. This is a valid area of demand as confluence of the trend line and 20 EMA, and very strong area with a gap up, as you can see. So price is running another bullish engulfing pattern. Another 4-hour area of demand has been created there by breaking the trend line, connecting this peak with this peak. Okay, so lots of things are telling us to go long or to go short. So, but we had a weekly downtrend by the time price was there. So anything, let's compare and see what is supporting shorts. Okay, let's see what we come up with. Anybody in the chat room? Okay, so tell me, Gopi, what is supporting shorts? Because we have 10 different parameters that are telling us to go long. So in order to go, so let me be a little bit. Let's be logical here. If we had a balance here, okay, we've got a balance here with two plates, one on the right side, okay, and one on the left side. On the left side we have the longs. On the right side we have the shorts. So we have 10 kilos or 10 pounds, because you are in the UK, 10 pounds, because we have 10, okay? We've got 10 different variables that are telling us, hey, longs. So the balance will be sort of this, inclined like this, isn't it? Right now, we've got 10 for longs and 0 for shorts right now. So in order to go short, I just came up with this analogy. Don't you think that the number of variables of the enhancers, okay, confluences on the short side should be bigger than 10?
Correct.
Otherwise, the balance would not be inclined in favor of shorts here. So at least we need 11, sorry. 11. So by looking at the chart right now, do you think there are more than 10 confluences for shorts? Anyone?
No.
No, at all. At all. I mean, I don't think you could find a single one. Well, probably the bearish line confluence on the weekly and the monthly bearish engulfing pattern. Well, it is not, because there is already a higher high. So the engulfing pattern is no longer there. The obstacle is gone. The weekly supply area is gone. So anything that you had as potential support confluence for short is out of the way. So we end up with 10 and only weekly bearish trend line confluence. 10 versus 1. Which side of the equation of the balance wins? It's obvious. Longs. It's longs. So that's the kind of analysis you have to do with multiple time frames. I mean, you have to put all that into context. We have 3 months area of demand in control. Last 3 monthly bearish impulse, bearish engulfing pattern out of the way, didn't consolidate away. Weekly supply created, weekly demand created. So new engulfing patterns, 20 EMA, new demand zone on the daily, on the 4-hour, etc., etc., etc. So, hey, you still want to go short? Okay, yes, the monthly is bearish, new monthly area supply, but that doesn't mean we can go short anywhere. We are waiting for a bigger retracement, much bigger retracement. And let me take a look at this. Let me go to the 3 months chart. So we've got here the trend line break and a brand new, well, we have here the old area here, all-time highs. Look at this, 3 months. Look at that. What happened here? Anybody? What is price action telling us?
Retraced.
Yeah, but I mean, bearish impulse did not consolidate away. And look what happened. Price rallied up there, probably a monthly area supply from there, and price dropped, engulfed, drop, and there was a monthly area demand over there. Price did not retrace. It tested that area of demand on the monthly. This is the 3 months chart. So now bearish engulfing, okay, all the way down there. And on the lower time frames, we already know what's going on. So all this is telling us, hey, we are not allowed to go short anymore, only longs. This is why, even though this weekly area of demand is not strong, it is high probability. So this is one of the moments when you can sort of tweak the rules, but in order to tweak the rules, you have to master them. So by reading all these price action and putting all the pieces of the puzzle together, you can end up saying, hey, I'm going to take the risk down there. If there is a great area of demand on the lower time frames, and there was a very strong area of demand on the daily, with a single ERC much wider than the average. Price did not retrace to it by a few takes and then rallied again. So the only thing we can do here is to go long right now. Short will be possible when price is at the monthly area supply or here the weekly area supply, again in confirmation, because we will have the weekly. We already have the weekly out of alignment. Make sense, everyone? Frederick?
Yeah.
Copy?
Yes,
Yeah.
it does.
Okay, good. So almost all the Aussie cross pairs are doing the exact same thing. Almost all of them. Okay? So now let's take a look at the euro dollar. Let's see what's going on here. Okay? What is the bias on the euro dollar right now? Everyone. I think this is pretty obvious. It's short, but we have a downtrend. Let's take a look at the weekly. We have, I'm not going to go into the details why these are weekly areas of supply and all that, because it's in the community and all that. I'm just keeping these areas of supply there on the chart, because many times people will tell me, why didn't you draw this? Why didn't you draw that? I mean, like I said on the previous webinar from last week, if I didn't have to support the community by drawing the imbalances and explaining why the imbalances are there, I would only have this on this chart. I would only have this. Nothing else. Because that's all we have right now. So I know that by looking at the chart, I know it's in a downtrend. I don't have to draw the trend line to know that we are in a downtrend. We are in a downtrend. So I just don't need that. Okay? But I'm doing that because people will ask, why is this supply? Blah, blah, blah. Well, it eliminated the area of demand. It broke the trend line. Why is this supply? Because it broke the trend line. Wow, short at the origin of the move. Why is this supply? Because it eliminated the area of demand, blah, blah, blah. So I had to keep those visible, those areas drawn on my chart, just to prevent that kind of question. Okay? So what do we have on the weekly right now? What do you think is going to happen in the next months, Poppy?
Price is going to go down.
It's going to go down. So we have 1, 2, 3, 4 bearish engulfing patterns and breaking low and all that. So short is the way to go. On the monthly, it's even clearer. We have several engulfing patterns, 1, 2, 3, 4. Even though this is not the kind of engulfing pattern we want to look at. We don't want a hammer as an engulfing. We want this kind of price action. Okay?
Yeah.
But as per the mathematical rule, this is an engulfing pattern because engulf previous candle. Okay? That's why it's red. So there's a lot of room for price to retrace all the way down there to the monthly area demand where we can see the strongest impulse in years. So price is probably going to react from that area. We need confirmation because we don't have a monthly uptrend anymore. So once price goes down there, reaches that area demand, longs will be possible again. So there's a bearish void to be filled. It's being filled. This was mentioned. The void to be filled was placed there, then moved there. I mean, as price has been dropping lower and lower. So we have a lot of. If we wanted to think of longs, what would we need in order to go long on this one? Copy? Or anyone in the chat room? What are in the weekly sequence, what would we need in order to go long?
We would need
weekly sequence, okay?
The weekly sequence. Well, we would need what do you call it? A bullish engulf pattern with consolidation, really.
Where? On which time frame?
On the weekly.
That would help.
Yeah.
But as per the rules, by taking into consideration the 3 time frames of the
Okay.
weekly sequence, which are the weekly, daily, and 4-hour. What do we need in order to go counter trend long? We need
We
one.
need it.
Which time frame do we need? Which time frame is important in the weekly sequence for counter trend?
The weekly sequence. So you need the daily out of alignment.
Exactly. We need, as Frederick said, the middle time frame out of alignment. Frederick said also break down the weekly trend line. That's even better, obviously, because we would have the top time frame out of alignment. That's even better. Okay, but that trend line break, okay, and the weekly being out of alignment would be good for counter trend longs in which sequence?
Monthly.
Exactly, monthly. Okay, Nima and Frederick, the middle time frame. It all depends on your sequence. So one thing that I mentioned last week's webinar and also in the committee, you can trade multiple time frame sequences. You could even sequences. You could even trade the daily sequence or even lower time frame sequences like the 4-hour for scalping or a very short term price action. But if you do that, you should have a different account for every single one of them. Not I would not advise, I would not encourage you to trade the weekly, the monthly, the daily sequence on the same account because you will have varied results, more losses in the lower times and that will be hindering your progress in the bigger time frame sequences. So if you have imagine you have $15,000 or $20,000 and you want to trade two different sequences, okay, put 10K on each of the sequences. So you will know which one is working better for you, and then in the future you will be able to lean only on the sequence that you are more comfortable with. Okay? So right now we have bearish engulfing patterns, weekly downtrend, bearish move on the monthly, and new daily areas of supply, 4-hour areas of supply, no retracement yet. So we need retracement. So that hasn't happened yet. We can use these two bearish engulfing patterns as confluence. In order to go short, there is a strong area of supply in the daily, so short are the only option on euro-dollar right now. Price action is telling us go short, bearish engulfing pattern on the weekly, on the monthly, and new areas of supply are being created. Even we had a 4-hour area of demand, that doesn't mean we can go long. We need something bigger than the 4-hour in the weekly sequence in order to go long, and that is the daily out of alignment. And ideally, we want overextension. We don't have overextension on the daily. Those are the rules for counter trend, and we also would need for counter trend long support of our weekly area of demand. That would be better. So if we had a weekly area of demand, this is not demand because it didn't eliminate anything. Okay, this is demand, but this is not demand. This has been eliminated, so supply was created at the top and all that. So this is just a bullish impulse, nothing else. So demand is down there. Why? Because we had the trend line break. And it's been tested already. So all this at the bottom is the monthly 3 months area of demand. So even if we want to set and forget, which we can't, we wouldn't be able to do that as per the rules because the level has been tested. So we are expecting price to do all that, okay? To drop all the way down. So that's the analysis on the euro-dollar. So we can't go long just because there is a 4-hour area of demand or a daily area of demand. We want, ideally, for high hours, counter trend scenarios, we would need overextension on the daily or the weekly. We're going to need support of a bigger time frame than the daily, weekly, down demand. There's nothing there, or monthly, obviously. So if price drops down there on the weekly, go onto the monthly 3 months area demand, what will we need? Anyone on the chat room, copy included? What will we need in order to for higher odds long scenarios? If price reaches that monthly, weekly area of demand, what should we be looking for there?
I think a bullish engulf really, or a rejection of price with the pin bar or something.
But in order to go long, what will we need? Let me switch to 3 months chart. That's a 3 months area of demand. Why? Because we have the trend line broken.
Yeah.
This is a failed ERC. Okay,
Yeah.
this is a basing candle, but this is a failed ERC, so the dot shouldn't be there. I don't know if I've got the new indicator there. It is, but it is not detecting. If I do this, probably 0.8, it's
You would
eliminated,
need,
you see?
yeah, you would need good consolidation away, isn't it?
But what do we need in order to go long in a 3-month sequence?
3 months.
Yep.
You want the weekly out of alignment.
Yeah. And what is the weekly out of alignment? What does it mean?
If you go back to weekly,
The 3-month sequence is made of the 3 months, monthly, and weekly time frames. Okay.
yeah,
Good. So what do we use the anti-time frame for? The lower time frame.
it's got to be in alignment with the higher time frame.
Yeah. So in order to go long at the 3 months average demand, we need new areas of demand on the anti-time frame, which is the weekly. So we won't be able to go long until we have a weekly area of demand. There's no sign at all of new weekly areas of demand. So going long in the 3-month sequence is not allowed. Going long in the monthly sequence is far from happening. Going long in the daily sequence, far from happening. So going long, not good. Okay, so we need a weekly area of demand in order to go long, but that hasn't happened yet.
No.
Okay, it did happen on Aussie versus Indian rupee, but it hasn't happened on euro dollar yet. Okay, Nima and Venus said that, and Frederick as well. So they were. You can see their responses on the chat. That functionality is not there, but I'm just replying to them in private as I respond to you. Okay, good.
Okay.
So let's take a look at the Euro Aussie. What can you tell me? Let me take a look at the weekly here. So look at that. Weekly demand.
Mm-hmm.
One sec. Weekly demand, price dropped. Weekly, very strong area of demand, eliminated by weekly area of supply.
Mm-hmm.
Eliminated by weekly area of demand.
Mm-hmm.
Trailer and break, demand.
Yep.
Supply, trailer and break, demand. So we have 1, 2, 3, 4, 5 weekly areas of demand. Out of 5 weekly areas of demand, 1 of them has failed. 1, 2 of them have played out nicely. No retracement to this one and no retracement to this one yet. So by just looking at the weekly chart, it's telling us that most of the weekly areas of demand play out nicely.
Yep.
So we have a very strong weekly area of demand. Weekly's in an uptrend. So after a very strong rally in price, what are we expecting? This is always the same. Okay, I've been describing this scenario when price was here. I've been talking about this in the community and the video analysis here. We were saying after a very strong rally, bearish impulse, bearish engulfing pattern, shooting star. Well, wider than a shooting star. The shooting star would already have a small candlestick there. This is, I don't know how to call it, but bearish pink candle. It retraced the weekly area demand. So we were comparing this price action with this price action, and we are having the same thing, but this weekly area of demand is even stronger because we have several ERC candles, and the bearish pink candle is not as strong as this one. So now, after a very strong impulse, bearish engulfing pattern, expecting a retracement to the opposing area, and that is exactly what happened. So after a very strong rally, as Venu replied now in the chat room, a bigger retracement expected. Bearish engulfing pattern. So now we can go counter trend long or not. Short, sorry. Can we go counter trend short in this scenario? Anyone? Copy? Can we go counter trend short?
You could, because supply is in control.
Supply, well, based on the monthly, yes. Okay. Based on the monthly, yes. Based on the weekly sequence?
No.
What do we need in a weekly sequence in order to go counter trend short?
Need at least a demand taken out, don't you?
Don't we have here a demand area taken out?
Yes, you do. But there's a level on the level, isn't there?
Yes, there's another level over there. Okay? So, one thing here. Bearish engulfing pattern after a very strong rally. So, middle time frame out of alignment, counter trend shorts are possible. And it's a bearish void to be filled all the way down there. On the daily, we have this daily area demand eliminated. So, we should have one created there. Daily is already in a downtrend.
Yes.
But we need, for higher odds, we need this daily area of demand. But then we're going to have another daily area of demand here. But look at the strength of this daily area of demand. This is very poor. So aggressive shorts are possible. Counter trend supported by this bearish engulfing pattern. If we add the monthly sequence, monthly time frame to this equation, then we also have a monthly area of supply. It's being tested, used up, expecting bigger penetration there, happened, expecting bigger penetration, happened. Okay? So, in a monthly sequence, we need confirmation for longs. In the weekly sequence, why confirmation for longs? Because we have monthly supply in control, but we have not a strong bullish impulse, didn't consolidate away. On the weekly sequence, we have longs down there on the weekly area of demand because the week is in an uptrend and all that. So it all depends on your sequence. If you are using the daily sequence, obviously longs are not possible anymore. Only shorts are possible. Make sense?
Yeah. Yeah, it does.
Okay, good. So let me read. Not until the daily demand is eliminated. NEMA. Okay, good. So this is what we are expecting on the Euro Aussie. What is going on? Can you remember? Can you tell us, Gopi, what are we expecting on these three Aussie cross pairs?
I think it's basic shorts, isn't it?
Yeah, they are downtrending, but we are creating new demand on the day and the 4 hour, and it's creating bullish engulfing patterns on the weekly. So that means that the left side of the ticker, the Aussie, is getting what?
Weaker.
Well, stronger. The left one because it's rallying. The Aussie, okay, versus it's getting stronger. On the left side, it's getting stronger.
Yeah.
Okay.
The longs are getting. Yeah, sorry, you're looking at your seesaw, the long and short. Yes, that's getting stronger.
It's getting stronger. So where is the Aussie on this ticker? On the right side. So it's dropping. So the Aussie is also getting stronger.
Stronger, yes.
So we have a correlation on the Aussie. The Aussie is getting stronger after a very strong rally. Same thing on the Aussie versus the Swiss franc and the Danish krone and all that. But it's upside down. It's like if we turn this chart on the weekly upside down. We are looking to go short at the weekly average supply on these Aussie cross pairs. We are looking to go long on the Euro Aussie because the Aussie is on the right side of the ticker. So the Aussie is getting stronger, and that's why we are having that. So we also have support of correlation for shorts here. Okay? That's what we have here. So now let's take a look at this one over here. Somebody said the pound dollar. Yes, Nima, he said pound dollar. Let's take a look at the pound dollar. Are you going to tell me? Wow. Okay, tell me. What do you think is going to happen? Oh my God, I didn't see this one.
No, it shorts all the way.
Happy Brexit, my friend.
Happy Brexit.
Happy Brexit.
Just out of curiosity, as we're seeing that price action, because I didn't see that.
I hadn't seen it. I mean, I didn't look at this one today.
No. What is the dollar index doing?
What do you think?
Rallying.
Yep.
The consolidation and high.
Weekly average demand. That was one of the one that we were going to look at. So right now, pound
Okay.
dollar.
Let's go back to GBP. Yeah.
So now it's time to go to England. It's gonna be very cheap. I remember a couple of years when the Brexit happened. Well, after the Brexit and all that, I remember I used Forex to buy my Forex analysis to buy my Surface Pro Microsoft laptop. The one I lost a couple of weeks ago, but I recovered in the airport. But because the pound was so weak and the euro was so strong after Brexit that I just wanted to buy it, and the laptop in Spain would have costed me like 2,600 euros. But in England, I got it for 1,600 in eBay. So using Forex for that as well. So it was really, really great.
Can we look at the 3-month and the 6-month chart on the GBP, please?
Yep. It's right there at the all-time lows.
Lows, yeah. So
on the 12-month charts, we have that bullish engulfing pattern, and on the 3-month chart, we have 3 months area of demand over there.
But that's...
And that over there as well, because the trend line was broken here. Let me draw this. We had peak. 3 months demand zone has been tested. Weekly average demand were created, but it looks like it's going to break.
It's going to go. Yeah.
It's going to go.
Short.
So we have short bias on the pound dollar with these bearish engulfing patterns. We have the last bullish impulse did not consolidate away. It didn't break the trail line. So we were talking about shorts and near supply. Price did not retrace to that area, which is a pity. It did not retrace to this one, which would be great. So now we have the weekly trend line is the same really, but if we adjust it to the last two peaks, that's the one and that's the one. Tested, no accomplishment, bigger retracement expected, and potentially this area of demand will be gone. It's already used up, and a bigger penetration already happened. So short bias and near area of supply, and there is a very strong area of supply right there at the top. So this is a great area of supply to go short on the pound dollar.
Yeah.
The strongest bearish impulse after this one. It is a pity that price did not retrace to this one, which is what's really great, and nested at the weekly area of supply. It fell short of retracing to that area because it hit the trend line confluence on the weekly, and then dropped, bullish, bearish, price at balance, and then dropped, removing this tested weak area of demand. So now we have a daily downtrend, weekly downtrend, everything is down, short and near to supply like this 4 hour aggressively, because we have used up area of demand on the weekly and the monthly, and 3 months as well. No, 3 months is tested only. So shorts on this one make sense, Nima and everyone. Besides, we also have the dollar index getting stronger and stronger with weekly area of demand in control, uptrend, bullish engulfing pattern, and room to reach the opposing monthly area of supply, which is also a demand area on the euro dollar, where we are expecting price to retrace. It is located at the parity level, more or less. Parity level is a little bit lower, but I'm convinced. I mean, price is not going to drop down there and eliminate that area without stopping and creating new areas of demand. It's very unlikely that's going to happen. So new areas of demand will be created down there. So on the way down, short bias on the pound dollar. So on the dollar index, we have the same thing, but we have created already a daily area of demand. Look at the impulse. 1, 2, 3, 4, 5 ESC candles. 4 hours is already overextended. So after a very strong rally of more than 3 ESC candles, what are we expecting, Copy?
A stronger retracement.
Exactly. So right now, even if you wanted to, you just can't go long on the 4 hours. It's very weak price action, expecting a bigger retracement. And that will also match the retracement we are expecting on the euro dollar and on the pound dollar and all that. So after a very strong move, those traders that took those trades at the top and the will start taking profit probably, and then price will start rallying again. So that's what, and these the consolidation away rule and the strong movements, strong impulses are ubiquitous. I mean, they are everywhere. Okay, they are. If we get new areas of new strong impulses, 3 or more ESC candles, then we must wait for a bigger retracement. If we get the no consolidation away with bearish impulse not consolidating away, then we can trade within those areas either. So those two rules are the most important. The most important rules in their lessons are consolidation away, strong moves of with 3 or more ESC candles, and then the core rules, the realignment. These are the 3 more important rules. So right now, bearish bias on the monthly, bearish bias on the weekly, bearish bias on the daily, so short bias. Counter trend longs will be possible all in the weekly sequence if the daily gets out of alignment and we have support of a bigger time frame. We have support of a bigger time frame, but the bullish impulse did not consolidate away. This is not demand. Test the demand on the daily, very poor, and now we have a very strong area of supply on the daily. If you add fundamentals to it, we don't need it. We know what's going on in the UK, copy, don't you?
Yeah.
We know.
No, we don't know actually.
Mr. Boris is, well, we know what he's doing. Oh, crazy moves these days. So what's going to happen? I don't care.
The UK is going to a US style presidency.
Yeah, but for the US it's working, but for the UK it's not working.
Well, we got interesting times.
Yeah.
There are opportunities anyway, so it's good. We need volatility, you know.
Yeah, that's what we have. So short bias right now on the pound dollar. Now let's take a look at at Bitcoin again. This is really, so here we were talking about, I remember very well when we were here, and I don't know what was the name of the member that uploaded a chart where there was like a parabolic move, and on that parabolic move the emotional stages were described. I don't remember. I will locate it. So when price was up there and right there, I remember very well that all my friends here where I live in Spain were talking about Bitcoin because it was everywhere in the news, everywhere. So they were telling me, since they know what I'm doing, they told me, hey, do you recommend me to buy Bitcoin? Because I'm going to buy Bitcoin. I said, no way, my friend, don't buy Bitcoin. Now you have to wait because it is not the time to buy because of the technical analysis. And also when the news channels on all the media is raving about something, is because they need buyers and sellers. Because they need that, because the big investors, the big institutional companies, and all these guys, they control the media. And if they need buyers or sellers, they just have to publish a few news in the major medias, and that's what they're going to get. So they were raving about Bitcoin is going great, blah, 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 making examples in the Spanish TV that a guy sold his caravan just to buy Bitcoin and now he's millionaire. Well, all that kind of silly stuff that you only believe you know what's happening, because if we analyze the markets and we go back in time by using the replay functionality of TradingView, what do supply and demand rules tell about this? I mean, you don't have to be a genius. Okay? So it's telling us after 3 ESC candles, bigger retracement expected. Where? To the origin of the move. It took a few months to retrace. Okay, no problem, but this was a high probability type of trade. That's it. So you've got not only that, you've got the very strong pink candle, which is wider than the candlestick body. So that's telling you that in this month, which month was it? October 2017, the bears were stronger than the bulls. And was the context good for shorts? Well, we didn't have anything here, all-time highs, nothing to go short at. But in order to go counter trend short, we need a middle time frame alignment on the weekly, sorry. So price rallied, broke the trail line at the top. This is a peak, a valley, broke. Supply at the top. Supply was in control, and all that. So after a very strong, so if we go to the weekly chart, what do we have here? 1, 2, 3, 4, 5 ESC candles. So after a very strong rally, what are we expecting? Retracement to the weekly area of demand. That was a valid trade on the weekly monthly sequence, played out for some time until it just broke. Okay? So it's always the same thing. So right now on the weekly, what we have here is this pink candle there, bearish engulfing pattern, and another bearish engulfing pattern. We have bullish engulfing pattern now there. Over there, weekly still in an uptrend, but we are having classes resistance, and all this is happening where? Let's go here. What are we expecting on the monthly? Copy, and everyone in the chat room, look at this. Compare this with this. What are we waiting for? What are we expecting?
For the retracement down.
Exactly. 1, 2, 3. We are expecting just that. That doesn't mean we can go counter trend short here right now. No, because we have still daily average demand in control and all that. We are waiting for that to happen. So now it is not the right time to go long on Bitcoin. But if we analyze this price action here on the left, you have a drop. Then this is not a base. This is the same candle is a drop and a rally. We have another peak. We have another peak. So we have this. Well, we have another peak there, but it's unclear. But it doesn't really matter. Okay. We've got, what do we have down there? A brand new area of demand on the monthly. So for high probability trades, we have to wait for price to retrace down there. But now on the daily, we have daily average demand tested, used up, potential area of demand, already have a 4-hour area of demand on right there. Okay. So that's a valid aggressive area of demand, but for high probability trades, low at the bottom of the range. So we want the daily out of alignment. It is, but we have the daily average demand in control, so no shorts are allowed. If this area of demand is eliminated, price is going to drop all the way down there to this daily average demand and the weekly bullish impulse. And if it is removed, it's going to drop down there. And if it's removed, it's going to drop down there at the monthly. So short if this area of demand is eliminated on the daily. Right now, if you are using the daily sequence, longs are near to demand. On the weekly sequence, no longs. On the monthly sequence, no longs. Make sense? Good?
Yep.
Okay, good. So now let's take a look at these. Just added a couple of stocks here. So let's take a look at this one. We are going to go one sec. No, it wasn't this one. It was this one, I believe. The one I wanted to look at, or this one. No, I think okay, good. This one. What can you tell me about this one? Copy? Longs or shorts? Or anyone?
Well, 3-month demand is in control, isn't it?
Yep, correct. 3 months demand in control.
Yeah, but
What else?
we have not had good consolidation away from
So
that
if we
demand
pull
level.
up this one over here, so what do we have here for longs? We have, let me
3
make
month.
3 months demand
Yeah,
and control, 3 months
yeah,
bullish engulfing pattern.
yeah.
What else? Anyone? What else? What about here? Can you tell me about that?
No consolidation
Exactly.
away. So
Freeman bearish impulse, no consolidation away. We have all that for um, longs. On the weekly, what do we have on the weekly? Anything for longs?
well, you got a trend line break.
We've got this trend line.
Yeah,
So we have a potential area of demand being
potential.
created. Okay, right
Yeah,
there. We already have one ESC candle. So we could say potential weekly demand being created. Okay. The weekly area of supply is here because of the trend line break from there to there, but
yeah.
single candle at the base already tested, bigger penetration expected, and probably will happen this week. So if price continues to rally and creates another ESC candle, then we're going to have a weekly area of demand of 3 months area of demand and bullish
Yep,
engulfing pattern confluence. Make sense?
yep.
So what do we have on the monthly? Anything for longs? Anything?
Yeah, you got a, don't you have a trend line break? It says you got a big bullish engulf
Got
playing out
this
now.
trend line there,
Yeah, that's it.
which has been broken there. So we have
A demand.
demand in control. We also have demand in control nested
There.
at the 3 months area of demand. This is all-time high, broken. So
Yep.
demand area in control, monthly demand in control. New monthly demand in control as a reaction to 3 months and monthly demand zones. We have all that. Okay?
Yep.
On the daily,
And you got
look at that. You got what? Weekly, what else? Also monthly bullish engulfing pattern. Confirm. Monthly
yeah,
bullish engulfing. Confirmed because the markets, the US markets haven't opened yet because yesterday was Labor's Day. So this monthly candle is the August 2019 candle. It's closed already. So we have a valid bullish engulfing pattern that can be used as confluence. This bearish impulse is not supply because it didn't remove anything. This isn't supply because it didn't remove anything. So we are expecting price to rally even higher. Make sense, everyone in the chat room? So we also
yep.
have a daily area of demand over there. Very strong rally with a very strong impulse with a gap up. I don't know if there was any news thing. Let me see. There was any news because we have trading here. Show where was it? Events. Show earnings. Awesome. Negative earning price rallies. I love it. I love it. I mean, in negative earnings, price rallies. I mean, I could show you hundreds of examples. Just crazy. Why is it rallying? Negative. So think about this. It doesn't have to be like this, okay? But just think about the logic and the rationale behind this, okay? It's not always like that, but just tell me if this kind of logic and rationale that I'm going to explain makes sense to you. So if you were a big investor or institutional trader willing to go long on this one and you control the media, okay, because you can post anything on Bloomberg, on CNN, on The Economist, on Barron's or whatever it's pronounced, and all these websites, investing.com, IBDC, all these websites. If you were a big long-term investor and an institution, and you were interested in having positions in this one, and you control the media, okay, what would you do? What would you do? You are a professional money maker. So there are bad earnings. Okay, so what do you think is going to happen if you are not a professional trader?
You're going to sell.
Exactly. You are going to sell. You're going to sell because, oh wow, the news, what was it? Was 48% worse than expected. So what do you think if you want to buy or you want to trade Papa John's International, which is, I think it's a pizza, no? Yeah, pizza. It's a pizza company. It's similar, I don't know. I've never seen that in Spain, so maybe in the US it's very common to see Papa John's. So bad news, retailers and non-professional traders sell. And what are these L orders doing?
They're buying.
Sorry?
The professionals will be buying.
Exactly. So if you have, I mean, imagine you are a hardware seller, you are selling, I don't know, iMacs or iPhones or Apple computers, okay? And you own one of the Apple computers in Oxford Street in London, okay? So you buy 100 Apple computers, okay? Apple computers. So what do you need in order to sell 100 Apple computers? What do you need? Anyone? In order to sell 100 computers, what do you need on the other side?
You need buyers.
Exactly. You need 100 buyers. So, or one buyer that buys 100 computers.
Yeah.
Okay. So if the news is telling us that this pizza, Papa John's, is bearish because there are negative earnings and all that, those retailers that don't know anything about supply and demand and the location, okay, and the context, what will they think? They will think, okay, I'm going to sell, because they are going to be reading bad news, because it will be checking all kind of websites, very bad, filtering stocks by bad earnings reports. Wow, pizza, Papa John's is one of them. I'm going to sell. It broke out, the lows, okay? So sell stop. Okay, I sell. Whoops, what happened? I lose. So all these sell orders are there by the retailers, and they fill the buy orders from the investors. We have the institutional buyers. We have weekly area of demand, monthly area of demand, weekly area of demand, 3 months area of demand, no consolidation away, blah, blah, blah. And we have earnings, negative earnings, okay? Negative earnings. And price rallies. I mean, from here to there, it's how much percentage? I mean, in 2 days, the stock went up almost 12%. Wow, why did that happen? If there were bad news. So the logic behind this is that when there are earnings within a bigger time frame area of demand, if they are negative, probably the price is going to rally. It doesn't always happen like that, okay? But most of the time, price will rally with negative news and price will drop with positive news. Make sense? Because there will be the big institutional orders out there, the big institutions out there waiting for sellers, okay? Because otherwise they won't be able to buy the underlying asset. They need sellers to buy, or they need buyers to sell their stock. Otherwise, it won't work. So price is rallying again over there, so longs will be possible again lower on the weekly sequence with weekly area demand, weekly bullish engulfing pattern as confluence, and very strong area of demand. We could say we could even use the earnings, negative earnings as a confluence. I mean, it's negative earnings as a positive also enhancer for longs, which I would use the earnings just for that. I mean, bad earnings, go long, my friend. Obviously, if the bad earnings happened at all-time highs with nothing to support it, I don't think price is going to rally. It's one of the occasions where price is going to start dropping. But if it is at a bigger time frame area of demand, with a brand new area of demand, then that's probably what's going to happen. Make sense?
Yep. Yeah, buying cheap.
Exactly. So this one, HGV Hilton Grand Vacations, is a great example as well. So on Hilton Grand Vacation, we have all-time lows. This is the origin of the stock. I mean, it started trading last October 2016. Okay, all-time lows, breakout. Look at the price action, really, really poor. But there is order in this chaos. Okay, there is order in this chaos. So here, what we do have right now is an area of supply here. They're eliminated. Okay, and we have a brand new area of demand. So we have what? An uptrend.
Uptrend, yeah.
So weekly and uptrend. So now let's take a look at the monthly. Look at that. Bearish engulfing 1, 2, 3, 4. Price is now above the previous 3 bearish engulfing patterns. What can you tell me about 3 months chart? Is this price action good for longs?
Yes.
Anyone? It is good for longs.
Right up to this.
So look at this. Demand here was eliminated, okay? But what can anyone tell me about these bearish impulse? Frederick or Gopi, anyone? Nima?
Sorry, which bearish impulse is I talking about?
This
3-month one?
Here, 3 months, yes. This one over here. No consolidation away.
No, yeah, no consolidation right now.
Okay? So bullish pink candles. We could use fake out. Okay? Isn't this bullish engulfing pattern here on the weekly? Look at that price action, okay? It's much stronger than the previous ones. So bullish engulfing pattern. And a lot of room for price to retrace to the top.
3 months.
To the 3 months area of demand supply and monthly area of supply. So there's a lot of room for price to keep on rallying. So if price drops all the way down there, then longs. What could happen here? After a very strong rally made of 3 AC candles, that's what we are expecting. But then if we get here, one sec, I'm going to draw with the other tool. If we, come on, here it is. If we get this, 1 or 2 basing candles, and then another ESC candle, price is never coming back. Well, not even an ESC candle, price is never coming back. That's usually what happens because there is nothing here on the left. It's very poor. So if we start getting a strong rejection, bearish engulfing pattern, then yes. Otherwise, what we should be looking at is a monthly bullish engulfing pattern, a pause, and a rally. And that's what we are expecting here. Either this scenario, 4 basing candles, retracement to down there, weekly average demand, or 1 pause on the monthly and a rally. Short will be possible there again, longs there, or if new areas of demand are created after a bigger rally. Make sense, everyone?
Yeah.
That's the kind of price action. It's like this. Price was rallying up there, based, and then dropped all the way down there to the weekly area of demand. Okay? So this is what we are looking for. Okay? That kind of price action. If these 4 basing candles happen there, since there are no obstacles, then it's very unlikely that a bearish engulfing pattern is going to happen. Okay? So what happened here? Let me see. We have news. Wow, negative news. Price rallies. Well, it happened at the top. One sec. Let's take a look at the daily. Daily. Okay, here. This happened the 1st of August. This one was the 30th. Okay, 1st of August. So negative news, and this is what we get. This bullish candle with negative news. Okay? We had weekly area of demand in control, so price rally from there. So that's what we are expecting to. So reading price action, as you can see, is critical, and not only one time frame. You have to put that price action into context and connect everything, because by doing that, it's like I'm always saying, it's like a GPS. A GPS is great to locate to pinpoint the location of any object on planet Earth if it has 3 or more satellites. A GPS with only 1 satellite won't give you a good signal. With 2 satellites, no good signals. But with 3 satellites, it will be able to triangulate the position of any object, because you are going to have first satellite here, let's say, second there, and third there. No matter where the object moves in space, you're going to have it attached by 2. But you only had the object here, 1 GPS, 1 satellite here, and the second satellite there. You can control the movements up and down, but you cannot control the move to the right side on the Z axis. Make sense? But once you have 3 or more, then you can pinpoint the location of any object. So the same applies if you use this analogy when trading the financial markets. We can use the multiple time frame analysis, the sequence with at least 3 time frames, and let's say they are GPS. And these will allow us to locate the right imbalance to go long or short based on the realignment rules. And that's why we are using 3 time frame sequences. If you use 4, obviously you're going to have more information, but also you're going to have more indecision, because you're going to have to analyze more charts, more variables will be in the equation, more analysis paralysis will happen, because you are going to have, the more time frames you are using, the more obstacles you're going to find. That's obvious. Okay, and this is more or less today's webinar, I believe, because we cover almost everything that we wanted. And we have the collaboration from Gopi, which is really, we're really grateful that he volunteered. I don't know if anyone will be able to volunteer next one. It will help you a lot. Next one, I believe, is going to be Teach the Dummy Robot session, where it's going to be funny, as always. That's what Miroslav, thank you. You had an electricity problem break. Okay, no problem, Miroslav. So this is, remember the most important rules: consolidation away, a strong move of 3 or more easy candles. That's also considered overextension, let's say. We're expecting a bigger retracement. And the core rules is the realignment rule. We need that to tell us exactly where we are allowed to buy or sell, using at least a sequence of 3 time frames. Okay, Nima, next time you volunteer. Great. So I hope you have to leave you.
Yeah, thank you very much.
Enjoy the rest of the day, and we'll be in touch, my friend. Okay?
Yeah, sure. No problem. Thank you.
Bye-bye, everyone. Bye.